Good afternoon, financial professionals. My name is John Florence. I'm Senior Vice President of Marketing here at E4 Insurance Services, welcoming you to The Brew, where we build relationships every week. Thank you for tuning in today. And for those of you joining us for the first time, we like to start the Brewcast by celebrating today's national days. Today happens to be National Walking Day. It's encouraging you to get out and stretch your legs and get the old heart pumping. 30 minutes a day is easily attainable, and it's as good as most other forms of exercise. It's low impact, high cardio, muscle toning, and a great way for you to chat and reconnect with a loved one. So go on a walk today and every day from here on out. Today is also Deep Dish Pizza Day. Pizza is America's favorite food. More than $56 billion a year business with more than 75,000 pizzerias nationwide. So many different styles and toppings. There's something for everybody. But today, we celebrate Chicago-style deep dish pizza made in a special pan with raised sides that allow for more of everything that you love on your pizza. Some days, there's absolutely nothing better than a nice deep dish pizza pie. My personal favorite is Giordano's stuffed spinach and mushrooms, straight from Chicago. Little pizza fact for you, when you say pizza pie, that's actually a redundancy, as the Italian word for pie is pizza. So on today's brew, we get to welcome Dan Peterson and Brendon DeRouin. We welcome them back as they have been on the show before. Brendon and Dan are both managing partners here at E4, and they are going to fill us in a little bit on what is going on in our industry and within E4. Before we get started, I'd like to remind you to please feel free to use the chat box and share your thoughts or ask any questions you might have. Also, all attendees are in a drawing for a CE voucher and a Starbucks gift card, which we will be announcing the winner at the end of the program. Gentlemen, welcome back to the Brew today. There's a lot to cover, so let's jump right into it. First and foremost, I think a lot of people's minds are, for the past several weeks, have been on the shakeup of the banking sector. And I know, at least on my end, I have received a number of questions from advisors and other folks wondering if some of that instability could force a spillover into the insurance sector. What can you share with us?
Well, I'll do the really high level since Dan spends more time in the specific banking sector than I do, but I will let everybody know that insurance companies are not banks. So a little different structure altogether. And with that intro, Dan, I'll hand it to you.
Well, I love that key insight. Insurance companies are not banks, Brendon. I appreciate the distinction there and the high level of information.
On the brew, so.
Yes. So, but there are key structural differences between life insurers and banks. You're absolutely right. One of the main things to think about is the biggest reason someone has deposits in a bank is to have access to them and have them be liquid and be able to take them out. There's key distinctions between that and a life insurance product. Usually you buy a life insurance product, not just to have instant access to your cash, but for other reasons. A guarantee of interest rate, a life insurance benefit, a long-term care benefit, other types of benefits that may be associated with that. Other things that insurers have are stronger liquidity. They have surrender charges on their products, so that protects their liquidity. Banks, when they have a run on it, they may be forced to sell assets, whereas an insurance company typically is able to hold their assets to maturity. So bonds and other things are able to be held. And so they're not fluctuating based on interest rates because they're really holding that asset because that asset is offsetting a future liability, which is the claim that they have to pay. So it's a really different structure. And while, yes, it's easy to say banks and insurance companies are just different, it really goes into the core of what they are.
Well, and I guess insurance companies are required to have more in reserves per dollar than a bank, correct, Dan?
Well, that's the definition of a legal reserve insurance company, which we've been on that platform since the early 1900s, as insurance companies do keep adequate reserves and they're tested. I mean, the investments we make into whether it's bonds or they both banks and insurance companies can have the same impact of rising interest rates, which is what happened with Silicon Valley Bank. The rising interest rates left the assets that they're holding less valuable than what they purchased in that, which meant that when they sold, they were selling at a loss. That was happening because of the run on the bank. And again, that bank was 90% of their deposits were unsecured, meaning they were above the FICA guaranteed backup, whereas most banks do not have anywhere near that percentage of assets that are above the FDIC guarantee. So very different structure, but we have seen that our insurers are really at acceptable capital levels. Their values are relatively stable, and I would also say they came through the industry's health is very good. They came through a very strong mortality event, which was the pandemic, and they're in a very strong position as we go forward, all things considered.
Yeah, I was just going to bring that point up, Dan. Thanks for mentioning it. Is, when people, I think when they're asking the question, when they're seeing what's going on in the banks, and of course worried potentially about their deposits, the knock-on question to that is my insurance policy safe, or is my annuity contract safe? And I think what I hear you saying is that because of the differences in liquidity, because of the longer term nature of both insurance and annuity products, that there really isn't the same kind of impact that we need to be worried about in terms of the liquidity that the bank sector is facing right now. But you mentioned an interesting point, and we can bring this up, is talk a little bit about that. We've gone through a major pandemic globally, and certainly we heard about increased numbers of people, what we call excess deaths over what people have normally been passing, rates at which people are normally passing away in the country. How did the financial or the COVID crisis impact insurers? And did it put the industry into some sort of instability? Were they able to maintain their guarantees?
Yeah, the reports that we're seeing out and that our carriers are reporting to us, John, you and I just got back from an industry meeting with a lot of our carriers, but even analysts that are looking at the industry as a whole, the industry was able to absorb these elevated death claims, and they did that through their diversified business platforms. Again, long-term care had some early deaths, which relieved some claims there, actually, ongoing payments. And then you have the annuities, which are still a big part of their business, and disciplined use of reinsurance. So every carrier has been using their reinsurance partners and structuring it so that they could manage that risk effectively. Mortality is still up. It's up about 7% above average, but it is returning back to its norms from what we're being seen reported to by our carriers. And the other thing that's helping right now is unlike the rising interest rates that are affecting the lending rates and the cost of borrowing money, rising interest rates have been a key lever for our insurers in improving their profitability, improving the stability of the products and the guarantees that they offer.
Yeah, let's talk a little bit more about that. We've been in a rising interest rate environment for the past year now, and I think most people are aware that we've seen rates basically increase about 500 basis points over the past 12 months. What is the impact beyond what we're seeing creating instability, perhaps a little bit on the banking sector? How is that rising interest rate impacting what's going on in both life and annuity business?
Well, Dan and I were out visiting one of our new carriers that we'll probably talk about a little bit, but we were onboarding National Life as one of our carriers, and we were talking to Mayron, the CEO there, who, CEO of the 12th largest insurer in the United States, said, with the rates are where they're at, I've purchased annuity as, cornerstone or bedrock of my financial plan. And when you can get, guaranteed yields above 5%, that is a sound foundation, for anybody's financial plan. And I think we are seeing that in our, increased volume and app count. Our annuity business is off the charts. These are rates that we haven't seen for 20 years. And when you can add this to a, well-constructed portfolio, it gives a certain level of certainty that everybody appreciates.
Wonderful. Let's talk about that a little bit more in detail in a couple of minutes. I want to come back to something that you mentioned, Dan, earlier. You said that both you and I had both returned from the spring Libra meeting just this past week. What can you share about that experience? And start off by explaining to our audience, what exactly is Libra and why are we a member of it?
Well, in 2013, I was part of joining Libra, or actually it was an organization called LifeMark, and became a partner along with 30 other agencies that had formed together to form a partnership to help us as a group, number one, manage our carrier relationships and work with 18 of our insurance company partners that provide us the products and solutions that we bring to advisors in the marketplace. From that, in 2020, LifeMark merged in with Brokerage Resources of America, a similar group, and to form, so LifeMark and Bramco formed Libra. So LifeMark and Bramco formed that, and about 60 partner agencies that are part of that. It gives us access to a lot of different resources as a firm that help improve the solutions we're able to offer. And then this year, Insurance Designers of America, IDA, merged in. So we're now 92 agencies strong. We are the largest source of independent life insurance production in the United States. So the carriers take notice. Part of that is the ability to bring dedicated underwriting teams to the table, dedicated services, additional resources for us as a firm. And so it's a great organization for us to be a part of. And there's some really wonderful initiatives that come from that and benefit the producers who work with E4 Insurance Services because of that membership.
So we were just at the spring meeting last week, and they talked about some of those initiatives. What would you like to share with our audience today about what they discussed? That's exciting.
Well, there's a couple of things. We're obviously focused on service initiatives. At E4, we talk about every day, and when we have staff meetings and we're working with our team, it's about creating a consistent positive advisor experience. And so what is it that we're doing that's creating consistent positive experiences for advisors as they interact with us and they interact with our insurance companies in bringing solutions to their clients and placing insurance-based products? So there's some challenges with that. The service levels at some carriers, the amount of business that is pouring in, especially on the annuity side, has certainly created large challenges. So Libra has a number of initiatives that we're involved with to improve the reporting of the service, so we can be better predictors of where good service is and where the challenges are going to come. That helps us set proper expectations. And then initiatives where we have exclusive relationships, even coming up with a reinsurer that is going to change our underwriting paradigm so that we can go out and get a reinsurance offer as quickly or even before we have a retail carrier's offer. And that is a backstop to know exactly where we're at and be able to leverage that offer with our carriers to even improve upon it, but provide even faster underwriting decisions. So that will be an exclusive benefit of working with E4 and E4 Insurance Services.
Fantastic. One of the things that came up E4 at the sort of celebratory dinner on the second to last evening at the meeting was honored. And care to share a little bit about what honor it was that E4 received?
Well, I think it's a reflection of overall of our team and the great advisors that are placing more and more confidence in us every week. And we're seeing that, our application count this year over last year is up 58% on submitted basis. It's incredible. And then you say, well, that's a lot of annuities. And yes, our annuity apps are up over 150%. Annuities are off the charts right now with the interest rate increase, but life insurance applications are up over 40% year over last. And we were recognized as the fastest growing Libra agency. And as you coined, John, we may not be the biggest, but we're the fastest. So we're the fastest growing. And I think that bodes to the great team that we continue to work and assemble, who come every day and lend their talents and abilities to us. And ultimately to the advisors we work with and agents and to their clients.
Fantastic. What a great honor, and congratulations on receiving that.
Thank you.
So Brendon, let me ask you a little bit. Tell me what's been happening so far this year at E4. We've just finished up the first quarter, the first 3 months of the year, and it's been, off to the races as usual. But what can you tell us? Any new changes happening at the company, and like to share with our friends?
Well, and to reiterate what Dan said, we were the fastest growing last year. Our app count is up phenomenally over last year. So I think we've got hopefully a good lead. Let's keep it going. With that, we have been adding to staff. We have new case manager with another one hopefully coming on shortly. We have new individuals in our design department. We are trying to add RVPs. So in this growth stage, we want to support that growth as well. So we provide a consistent positive advisor experiences, which is one of our focuses for this year. That being said, and I, previously was reflecting how grateful we were in this age of great resignation or quiet quitting. We hadn't lost employees, we just continued to grow. And headcount, we are still continuing to grow, but we did have, ultimately 2 employees move on. And the real reason was they didn't like the work at home environment. As we have, our attitude is to bring on the top person wherever they are. If they happen to be in our Fargo or Madison office, great. If they happen to be located elsewhere, well, that's fine too. We're in a digital age, we can handle that. That being said, some of the people that we have, brought from other companies with experience ultimately decided that working from home was not what they wanted. So, and I think other companies and carriers are figuring that out, but just a word to the wise to make sure that if you hire a person for working at home, that it does fit their mindset and attitude. So, but with that growth overall, we were a top 25 Libra agency last year. We have that goal again with the addition of IDA. It's not really a static goal as we have added more firms. So I'm trying to continue growth and be able to expand our services to our advisors and therefore their clients.
Yeah. What kinds of investments are both of you making in the business now, either in terms of infrastructure or personnel or, various things that we're doing to be able to sustain the growth?
Personnel that we've, just aforementioned, but we also added Firelight end of last year, which has been a godsend for this increased annuity business. It was a working.
What on earth is Firelight?
Firelight is a digital platform for submitting annuity business, other forms as well, but mostly annuity is how we use it. And for the carriers that have Firelight set up, you can electronically drop a ticket, get a policy number right on the bat, do it do it just like we had on the e-apps. You can also fill out, it electronically and print it. But the really the key and what creates that consistent experience is you have all the forms, the correct forms, and it doesn't let you what we call in the business NIGO, or not in good order. Have a NIGO case. Everything is filled out correctly before you can move on and submit the application. So nobody likes to go back to a client and say, hey, we missed a form, or we got the wrong form. And now if we're using Firelight, that should be a problem of the past.
And it'll even go beyond that. In alerting the advisor on the suitability forms, if one of the ratios seems to be outside of the norm, that'll raise additional questions with suitability, that can be explained or addressed prior to submission, which also greatly improves the turnaround time of business.
So it seems like Firelight's going to add more efficiency, quicker issuance of annuity business, and just kind of to keep with E4's motto, make life simple for our advisors, or simpler. Not necessarily 100% simple.
As long as we're dealing with insurance companies, no, it's not. We're never going to make it seamless.
You mentioned adding on, bringing on new carriers onto our platform. Tell us about that. Who are you most excited about?
National Life, as I mentioned, out of Vermont. They are coming up on their 175th anniversary, so some incredible tenure in this business. They have well-rounded, products from annuity, life, whole life, IUL, term platform that has multiple acceleration of benefits. So, one of the taglines that is often said in the business now is, do you have the new insurance or the old insurance, or is your insurance, for the living? And with, chronic, critical, cancer accelerations on term, it makes it unique. So, I always say we don't need to keep reducing the cost of term. It's cheap enough. I mean, when you present term to clients, it is less expensive than they expect. So we can add more value for that, increase the likelihood that they're going to use it if one of these risks happen. So excited about them. John, on the annuity front, you recently did a SPIDA application, which is a totally electronic end-to-end platform. What was the turnaround time in your case?
It was less than 12 hours from initial appointment to completion and acceptance of the application. And the funds are in transit as we speak, and less than a week. In a time where a lot of other carriers are delaying for several weeks, in some cases even months, to be able to get business processed. So
and I want to go on the record here and manage expectations. We are not saying all cases will be done in 12 hours from contracting, but it is an example of how quickly things can be done when you've got an electronic process from start to finish. And that is obviously one of the headaches that we hear, and why some of our advisors just don't want to deal with annuities, regardless of how much of a bedrock on the financial plan they can be. It's not worth the hassle.
Dan, any carriers that you're excited about having joined, come under our umbrella?
Well, we continue to see InsurTech, technology improve and change our business. So our pilot program with Symetra Swift Term has really continued to develop. We're really thrilled about that. It's not a new carrier for us, but it's one that's really moving into new space. It's changing the whole accelerated underwriting discussion, because it's not just about fluidless or putting your client through avoiding an exam with a paramed. Now it's instant issue, and so that capability of that ability to to go from application to a $2 million life insurance policy in a PDF format that's been paid for electronically, all within 17 minutes, is now a reality. It's not something that we say will be out there when the Jeffersons are flying spaceships around every day commuting to work. So that's here. It's here and now, and it's happening. And so that's pretty exciting. We've also got the Western and Southern families of companies now on our platform. So Western and Southern, strong annuity carrier, Columbus Life, a strong life company, as well as Lafayette Life. So their suite of companies is going to be on. With National Life, it includes Life of the Southwest, which is a wholly owned subsidiary of National Life. And I would say you mentioned a little bit about where we're at. We love to see the capitalization levels of our mutual carriers. Mutual carriers have the highest capitalization rates in the industry. They're not beholden to activist shareholders. Private equity would come in second. You see a lot of carriers owned by private equity. They have the second highest capitalization rates. And then our stock companies have the lowest capitalization of all three types of carriers. And they have their own set of challenges that have caused some companies to go in and out of being competitive, not competitive. So we see some of that. So definitely bullish on our mutuals from just the stability that they bring to the table.
Yeah. And for the people who are on listening in today, I think, you may wonder what's the value of having, more carriers added onto the platform. And part of that is similar to anything, the more diversification that you have, the better on the one hand. I think the other side of it is that, carriers, whether they are mutual or private equity or stock owned, have different strengths and weaknesses, and kind of design their product lines and specific products to address specific concerns or conditions within the broader market. And being able to have access to some of these carriers, I think, for our advisors means that we can take your specific case and the fact patterns that are related to a specific case and find the right carrier and the right product to be able to address the needs for that particular client. And the more that we can manage, it doesn't mean that that's more knowledge or more information that the advisor has to manage on a day in, day out basis. But from our perspective, the more tools that we have on our workbench, the more precise we can be in crafting the solutions and the outcomes for your clients. So let's wrap up, as we're going a little bit long today. We just have a couple more minutes, but tell us a little bit about what exciting is going to be happening within E4, either event-wise or, as you look out under the horizon for E4 as a company. What exciting developments are coming down the pike towards us that our advisors can look forward to?
Well, top of mind, just under a month out, is our BBT, Building Business Together. We are doing that on May the 4th. And yes, it is a Star Wars theme. So if you have not registered, you should register and attend in whatever costume of choice that you would like. You've got 9 movies and several other off spins to choose from. So dress accordingly. The day before that, NAFA Wisconsin is also doing their Power Summit. So you should make it a 2-for-1, come for 2 great days of educational content and motivation. And
it's at the same location, right, in Delafield?
Exact same location. Top notch place, easy to get to from either Milwaukee, Madison, or even Green Bay. So all have good airports as well if you happen to be coming from farther. So.
Well, I'll be flying the Millennium Falcon in from Fargo, so it's even accessible from Fargo as well. So,
yeah, we laugh about that, but I've been talking to a number of people who said they're coming, and I think we're bringing out the latent fanboy and fangirl in all of our advisors, because so many of them have asked if it's okay if they come in costume, which really surprised me. I didn't think people are going to really want to do that, but we're up in the ante, so get your best costume and come dressed up.
You started it last year, John, with our Back to the Future theme. So we're keeping it rolling. So
Yeah, that made me
Any other
question
last things?
your Jetsons comment about flying cars. I mean, they had flying cars in Back to the Future, and that was 2015, supposedly. So,
Any
sorry,
last things that you would share with our audience today, gentlemen? And I appreciate the
Well,
the-
yeah, John, thank you for hosting this. Great to just have a quick quarterly update and share. You know, I remind our team, and I would remind every advisor I talk to that, you know, more Americans are turning age 65 than ever before. 11,000 now, just shy of 11,000 65-year-olds every single day in our country. And that is changing. It changes the conversation from accumulation focus to distribution to aging in place. And how are you going to protect against those uncertainties that come with all of those things in life? And with the changing demographics brings great new opportunities to serve our clients in a better way. And so that's part of the theme of our BBT, but I would just wrap up that every day we're looking for better ways to craft financial outcomes that really assist those clients as their life needs change and they go through that process. So it's a great opportunity to be working with your clients, and it's a great time to be in our business.
I would
well, yeah, go ahead,
agree.
Don.
Very, very bullish on our industry. You know, as the markets are turbulent, let's not provide, you know, some certainty with aging boomers, tax law changes, everything else. There is no greater time to be in our space and look at some of the solutions we have to bring peace of mind to your clients.
Fantastic. Thank you both for sharing today. While I wait to see if there are any questions that show up in the chat box, we'll go and move forward to our weekly giveaway. So Dan, if you would, pick a number between 1 and 20.
I'm going to go with number 4.
Number 4. Let's see who we have here. Today's winner is Jay Hinkins. Congratulations, Jay. And you will be receiving a complimentary CE voucher, complimentary from Nationwide, and a Starbucks gift card coming your way from all of us here at E4 Insurance Services. So join us next week. We will be welcoming Steve Walker. Steve is Vice President of Institutional Accounts here at E4, and he will be sharing how to help your business clients add value with employee benefit solutions. If you've never heard Steve speak before, you're in for a real treat. He was absolutely our most popular guest on the Brew last year. So make sure you tune in next week for the Brewcast. Thanks for being with us today, folks. I am looking out there and seeing that there are no further questions. So, gents, thanks again for your contributions today. We'll look forward to seeing you again next week on The Brew.